Stop. Do not sign that offer. Do not get swept up in the noise. I am telling you, right now, I live and breathe this market every day. 2026 is setting a dangerous trap for homebuyers. This is a formal warning. The market has fundamentally shifted. The advice that worked for the last 5 years is now obsolete, even hazardous. Too many people think they're getting a deal. They end up locked into a decision that could cost them for a decade. The game has changed. You need to change with it, or risk a bad investment. You have heard the saying, everyone has. Date the rate, marry the house. It sounds clever, it sounds reassuring. Today, January 26, 2026, this is the single most dangerous piece of advice in real estate. It encourages you to ignore the most important number. The purchase price. A mortgage rate is temporary. The price you pay, that is permanent. Let's talk facts. No feelings, no hype, just the numbers. As of this morning, active listings are up 12.1% year over year. That is not a blip. That is a trend. In fact, that is 26 straight months of gains in for-sale inventory. The scarcity that defined the post-pandemic market is over. It is gone. Sellers who were waiting on the sidelines are now rushing to list their homes, trying to catch the top of the market before it corrects. This surge creates competition. For the first time in years, sellers have to compete with each other for your attention and for your offer. Think of the market like a bathtub. For years, the water level was dangerously low as demand. The faucet ran full blast while supply. The drain was clogged. Now, the situation is reversing. The faucet of demand is slowing to a trickle due to affordability issues, while the drain of supply is wide open. More and more properties are pouring into the tub. We are now seeing a staggering 27% in unsold inventory compared to the lows. When a tub overflows, the water has to go somewhere. In a housing market, that overflow translates directly into price pressure. Water spills, prices drop. It is that simple. This is not a localized phenomenon. This is happening in major markets across the country. We are watching the number of available homes for sale climb back toward pre-pandemic norms. This is healthy. This is necessary. For you, as a potential buyer, it is a massive opportunity. Let's look at the speedometer of the market. This is a metric we call months of supply. It tells us how long it would take to sell every home currently on the market at the current pace of sales. For the last few years, that speedometer was stuck in the red zone, often below 2 months. It was a frantic, high-speed chase. Today, the national average has climbed to 3.5 months of supply. The needle has moved decisively from the red seller's market zone into the yellow neutral market zone. The engine of the housing market is no longer redlining. It is stalling. This is a critical indicator. It proves that the flood of inventory we just discussed is not being absorbed by buyers. Sales are not keeping up with new listings. Why? Affordability, high prices, elevated interest rates has simply priced too many people out. Demand has weakened significantly. Active listings are now approaching 1 million homes nationwide, nearly double the record lows from the pandemic peak. The desperation has evaporated. The momentum is dead. What does dead momentum feel like on the ground? It feels like properties sitting. It feels like more for sale signs staying up for weeks, not days. It feels like a wave of price-reduced notifications in your real estate app. The market is telling you loud and clear that the previous prices are no longer sustainable. Sellers are adjusting expectations downward to meet a much cooler buyer pool. Forget the headlines and the expert opinions for a moment. Let's do the math. I want you to visualize a split-screen comparison. This is the choice many buyers are facing right now. It is a choice between buying now at a high price with a slightly better rate, or waiting for a lower price, even if it means a higher rate. This simple comparison will show you why patience is financially superior. Look at the numbers. They do not lie. They see the rate as the prize. The seller is motivated. The price is $420,000, but interest rates have ticked up to 6.5%. The expert knows the exact opposite is true. First, their total loan amount is $80,000 less. That is an immediate $80,000 in savings on the principal. That is real equity you avoid surrendering from day one. While their monthly payment might be slightly higher initially due to the rate, they can refinance that 6.5% rate in the future. The buyer on side A, however, can never, ever go back and renegotiate their $500,000 purchase price. You can always change your rate. You can never change what you paid. Now, imagine the market drops by 10%. Side A, 500,000 drops to 450,000, an instant paper loss of 50,000. Their down payment could be completely wiped out. Side B, 420,000 drops to 378,000, a paper loss of 42,000. The lower purchase price provides a powerful, permanent buffer against market volatility. So, what do? You need a playbook. This is the time for precision, discipline, strategy. The winners in this 2026 market will be the buyers who are most prepared, most patient, and most focused on the numbers that actually matter. The amateurs will chase rates. The pros will secure the right price. First, maximize cash. More cash equals more power and safety. Second, watch days on market. Let rising days on market be your signal to act. Third, ignore realtor hype. Trust data, not deadlines. Smart buyer checklist. 1. Maximize cash. 2. Watch days on market. 3. Ignore realtor hype. Subscribe to see where I park my money next.